On behalf of Dun & Bradstreet, I would like to welcome you all, Ashutosh, Jaspal, Manish. Really appreciate your presence. Good evening, everyone. I think this is the last panel, and today we are going to discuss the evolving role of foreign banks, NBFCs, and FinTechs in the financial services ecosystem in the country. Welcome you all, and without adding too much, I think one thing is for sure that the industry is going through a change. It's a shift, and the new paradigms are kind of forcing the entire ecosystem to change and adapt to new realities. Foreign banks, NBFCs, and FinTechs are all playing their role, be it supporting the cross-border transactions or expanding the reach of finance, expanding financial inclusion, or using innovative technology to be more efficient, to bring in more operational efficiencies. So this is what the broad theme of the discussion is today. And I would like to start with the first section, which happens to be the evolving role of foreign banks, NBFCs, and FinTechs. And let me come to you, Manish, with the first question. Foreign banks in India are operating in the intersection of global financial markets and the local needs, unique dynamics of Indian economy. And while the foreign banks hold about 6% market share of the total banking assets, at the same time, you contribute significantly to the trade finance and cross-border transactions. And yet, you must navigate through all the evolving global financial regulations and specific Indian local requirements. So given the current economic and competitive landscape, how do foreign banks actually continue to differentiate your value proposition in India?
Sure, thanks Mukesh. So I think obviously, some of the reasons why foreign banks, continue to be present in India and continue to be successful. I think some of those reasons will continue to be the success factors going forward as well. So one of them is, I think, that foreign banks bring scale because they access multiple markets. So this could be on the capital side. You can access capital across a broader range of markets as well as across a wider range of investors. So that's something which reduces the cost of capital for Indian borrowers. So I think that's a key strength that foreign banks will continue to have. I think a corollary to that is also that on the technology side, as things evolve, new technologies can be implemented by foreign banks because they are implementing them across a wider range of customers and across a wider range of geographies. So that also ensures that it can be made available to customers at a price or at an economical level for them. So I think that's the other thing which I thought would be one of the reasons foreign banks will continue to thrive. The other key aspect obviously is that foreign banks obviously make Indian customers more aware of the opportunities overseas, and overseas customers more aware of what is happening in India. So, that could essentially give more opportunities for corporates overseas to, look at Indian market and play a more active role. And similarly, Indian customers can do a lot more overseas as well because there is a trust factor that is there with banks and, customers do take those kind of inputs, more seriously when you've had a relationship with an institution for years. And that sort of enables, a more integration, amongst the various geographies that foreign banks are present in. So I think those I think are on the scale side, I think, which I think will continue to be contributions from the bank side. The other is obviously, as new products evolve in various geographies on the trade side or on the treasury side, foreign banks will continue to, be at the forefront, in offering those to customers. And that will make that should make it more easy for customers and more flexible for the customers to access financing. So that's, I think, the other thing that will remain a key area. I think the third thing is obviously, as climate change becomes important, I think foreign banks will have a little bit of an edge because, they have been exposed to some of those requirements for a longer time now. They've evolved structures, on the sustainable financing side, on environmental assessment side, they have more competence in those areas, and they can probably take the lead in bringing the market and customers up to speed on some of those issues. So I think those are some of the things I feel will remain, success factors for foreign banks as they operate in India.
Great. Thank you, Manish. Really appreciate you explaining the evolving role of foreign banks. And we are fortunate today because we have three important participants in the ecosystem with us represented, NBFCs and FinTechs as well. And just to set the context, India's FinTech market is expected to reach about 190 billion US dollars by 2030. And at the same time, NBFC's credit is projected to account for almost about 21% of the systematic credit in India by 2027. So with the increase of financial inclusion and the regulatory shifts, the interplay between these players is redefining India's financial ecosystem. Now with that context, given the projected growth, what key challenges must the FinTechs and NBFCs overcome to expand their reach while maintaining risk resilience? So that's the question I wanted to come to you, Ashutosh and Jaspal. Maybe.
Okay. No, I think this is interesting. I think there's no second thoughts that BFSI, both banks, NBFCs, and FinTechs together are operating in a very collaborative way. There's no competition, and it's a joined-up approach which is being adopted. Now, I'm representing FinTechs. Credible as a business has both an NBFC arm and a FinTech arm. Now, from a FinTech's perspective, if you look at what are the key challenges that we oversee, is few parameters, right? In terms of adding value from a wholesale or a B2B lending perspective, right? It's about how efficiently can we help banks and NBFCs digitize the entire credit process. How can we help them embed the entire facet of AI? Now, historically, if you see how change was happening, most of the banks were doing this, or most of the NBFCs were doing this in-house. There is an increasing acceptance of banks and NBFCs partnering with SaaS partners like us, FinTechs, where we have developed models or we've developed platforms which they can accept and adopt. Credit underwriting is one of the easiest facets in which this can be accepted. So just doing an LOS was one facet, but then it evolved into how we can embed learnings from AI and ML into the underwriting process. The second big facet which is being solved is the entire journey around compliance, KYC, etc. How can tech platforms and FinTechs helps bank and NBFCs digitize the entire underwriting and the compliance process out? Now, whilst this is the solve that FinTechs are doing for banks and NBFCs, the robustness depends on the tech which is being deployed for banks. Is it robust enough for a large participant to trust the tech, and there are no breach from a data security control standpoint, will determine the success with which this entire partnership emerge and approach.
Thanks, Ashutosh. So Jaspal, I now come to you. What kind of challenges you and your organization must overcome?
Yeah, so I think the NBFC world has been learning on an ongoing basis from the banks, and more recently now from the FinTechs. So we're trying to adapt and adopt from both sides. Clearly, the new things that have entered our way of doing things is, one is on credit risk assessment using alternative data than the conventional data that used to be used earlier. Clearly, that is now very prevalent across NBFCs. I think the art of compliance, if I can say it that way, is now become both a compulsion, but also I call it an art because it's the way you do it, and the philosophy and the value system with which you approach it. Technology clearly has been a late sort of realization for the NBFCs, but clearly very much now a meaningful thing. I think the two things that are different probably still are trying to create financial literacy, because most of the NBFCs operate with participants who are not as literate financially. So there is that hand-holding and the literacy issue. And the final thing I would say for NBFC is that they can't afford to compete with the size of the banks, and they can't afford to compete with the scale of the fintechs. So they have to find their niche. This trying to do what others are doing is not going to get us anywhere. And I think the more successful ones will be the ones who have found their niche.
Wow, that's a good way to end that section and come to the next one, because that one is, the next one is on innovation and collaboration. As you rightly said, finding a niche and coexisting with other participants in the market and still contributing to the growth of the overall ecosystem. So as the technology-driven lending models gain traction, right? You said alternate data, etc. How can financial institutions evolve their credit assessment process to improve MSME access to credit while ensuring still responsible lending practices? I'll come to you, Ashutosh, with this question, but I would also want you to add to it alongside Ashutosh.
I think the gap is massive. It's over $500 billion sort of a gap, with the need for MSME credit growing at almost 15 to 20% year on year, and that's the thrust that India as a country has. That's the thrust that MSMEs in the sector have, right? Now the solve can be seen from a multiple lens perspective. Now the solve could be seen in terms of how can direct access to credit be given to MSMEs. Big challenge around that is how do you underwrite that? Do they have structured data to provide for conventional credit models to enable access to credit from a bank's or an NBFC's perspective? How can innovative product be launched which will enable access to credit? A different way to see this is there is credit being enabled in an embedded way in almost our day-to-day life across how we use consumer products, right? You walk into a retail outlet and you buy a phone, there is an embedded credit which is linked into the phone into EMIs. You buy anything, there is an embedded credit option which is given out. A lot of these are retail option, a consumer option. How can we replicate the ease at which consumer credit is being given into an MSME ecosystem where you give B2B credit with the same sort of ease? Now, that means devising underwriting models which are based on data, cash flow, business history, not just financials, and devising underwriting models which are far more nimbler, tech-driven, and not just dependent on collecting a lot of paperwork in terms of devising this. Now, most of the banks have evolved the credit process and the journeys. A lot of NBFCs have started doing this. NBFCs, and you mentioned, will contribute almost a fourth of the entire lending portfolio in few years' time. So there is a lot of credit evolution which is happening from a process perspective. But what's needed is how do we come out with newer products which is more agile, which can give access to MSMEs credit, which is there in the retail segment today in India globally.
Great. Jaspal, would you like to add to that?
Well, only briefly. I think it's all been very well covered. But I think what the MSME is basically looking for is access to credit first at affordable price. So I think that is still a gap. And I think that Ashish said what happens after that. But I think that to start with is a big gap. And, it's a very large market. Only 15% of the registered MFIs have access to formal credit. So, there is a huge gap there. The other thing I would say is that there is an increased need for customization. There was a time when we couldn't economically transact small ticket items. I think the fintechs have proven beyond doubt that size of transaction is no longer an issue, volume is no longer an issue. So Clearly, that is one hurdle cross. But trying to customize transactions and to have one standard product that you can sell, this product push is going to probably be a challenge. And how do we meet the needs on a more customized basis is, to me, the big challenge.
And could technologies play a role?
Definitely a part, yeah. The technology will play a big part of that. Yeah.
Great. And that brings me to you, Manish, with my next question. It's about innovation and collaboration. So, how do foreign banks and NBFCs view the role of AI and automation in enhancing operational efficiencies, at the same time compliance in Indian market?
So obviously, efficiency is pretty critical from foreign banks' perspective, because obviously they are growing. A presence in India is obviously restricted to some extent from a regulatory perspective. So it's important to make the most of what you have. So obviously, automation helps in making sure that the manpower involved has to be low. So therefore, it is more efficient. And the other thing is that it ensures that there is no ad hocism in the operational process. So therefore, you do the same thing in a proper manner, time after time. The other benefit I obviously feel that automation also does is that any process that is set up by the bank or by an NBFC is considered at a more senior level. So all the aspects can then be taken care of, and instead of doing something locally which probably meets the local need but probably misses out on some of the regulatory aspects, can be taken care of. So obviously automation is quite critical. And I think what has also happened over the last few years, that increased automation has given a lot of data to both banks and other financial institutions to basically drive data analytics and to make the product offering to customers more personalized, which I think is also becoming a need from a customer perspective, especially as we get into the next gen of customers. So I think that's also what has really helped. And I think what I think the way AI will really help in that is that now that you have the data, you have done the data analytics, you have built products around that, I think AI can probably help you to become more predictive in both customer acquisition and from a fraud monitoring and compliance monitoring perspective as well. So that's the way I really think it's going to evolve going forward.
Great. And if I could just stay with you, Manish, for our next track, which was on navigating cross-border expansion. So as India continues integrating into global financial system, what policies and market shifts will have the greatest impact on cross-border banking and investments?
So I think on the market shift, clearly what I think there's the next big thing that's going to happen is on the cross-border payment side. I think on the domestic payment side, we've obviously seen a huge change over the last few years. I think cross-border payments, although there have been some minor tweaks, but still it operates pretty much the way it used to in the traditional sense, through SWIFT, through the documents and all of that. I think that is going to see a major upheaval, I feel, going forward. So that's something which I feel is going to be a major market shift. I think on the policy side, the couple of things I really think will evolve is, one is on the data privacy, because, that is becoming a requirement in almost all geographies. So, how banks are able to share information on customers across, across their platforms, across with third parties. I think that's going to be a bigger challenge. So that will present a challenge to banks in terms of cross-sell or in terms of, broad-basing or leveraging their customer base for new products. And the other thing, obviously, is going to be, policy on climate change, which I think is again going to impact where banks prefer to lend, what kind of terms that they can offer, what customers they cannot lend to or would not like to lend to. So I think those are the critical things. I think from an India perspective, obviously, I feel that, as we become a bigger economy, there could be more action on the capital account side, obviously we'll progress slowly, but I think that's something which will also probably, trigger more on the banking side, in terms of both what banks can do and what kind of customers they lend to and what kind of competition you may see in the Indian market.
Great. Jaspal, would you like to add to?
Yeah, quickly, in addition to what Manish has just said, I think gradual easing of capital controls, I think, will be an issue that will help in policy terms. Clearly, internationalization of the Indian rupee, by doing trade settlements, bilateral swaps, etc. Increasing bilateral and multilateral FTAs, etc., will help. Ease of FDI and having a more predictable tax environment will help in policy terms. So I think there are many such areas where, the central bank digital currency will facilitate cross-border movement, both in terms of being faster, secure, cheaper, etc. So I think there are several policy reforms, just strengthening FX reserves, having more trade partners, more diversified trade partners, etc. So there's a lot that is within the grims of economic reform for the government to tinker with.
Great. So that gets me to the next question. Thank you for answering that. And that's for the entire audience. The next question to learn and share from all of you in terms of what you are doing and how we could. And today we had representation from SEBI, from RBI, from regulators as well here, people from MFI. But for the whole ecosystem to work and evolve and thrive, we need to do innovation, we need to collaborate, and at the same time work with regulators proactively, right? And make sure that we are participants in those policy makings and moving towards the right direction. So my question to all of you today is, as the Indian regulatory landscape continues to evolve, how should financial institutions, I mean, one is that how do you do that, and in general, how should financial institutions proactively engage with policymakers to ensure sustainable growth while fostering innovation, right? So some bit of how you do it and some bit of how you would want it to happen. Maybe I could start with you, Manish.
Well, I think, so it's just basic stuff. I mean, I think you have to be transparent with the regulator, first of all, and, highlight challenges that you're facing. I think in that sense, RBI has been pretty open, to engage with banks on various issues, in terms of regulations and all of that. Obviously, having industry associations help because, there, most banks can come on the same page and sort of drive a common agenda, which I think the regulator will also, that enables the regulator to see a broader aspect or broader perspective on the issue and then sort of influence that. So I think those are some of the things I would think, one needs to sort of continue doing, to sort of engage with the regulator more proactively. Yeah.
Do foreign banks have a standard platform to kind of reach?
So foreign banks are obviously part of the Indian Banks Association. So there is a foreign bank committee as well, which primarily looks at foreign bank issues. Obviously, then it flows into the larger committee, and then it gets presented to the Reserve Bank. But obviously, you can also approach RBI as a smaller group and discuss. And obviously, there are some issues which are specific to foreign banks. And that's something which we have been raising in the past with the RBI through our smaller groups, and RBI has been pretty open in discussing and finding solutions which work for everybody.
Great. Thanks, Manish. And that brings me to you, Jaspal. As an entrepreneur, what would be your advice and what would be some of the examples of proactively engaging with policymakers to ensure sustainable growth?
So I feel that the environment has changed dramatically over the years. There was a time where you could only approach regulators through associations and other such bodies. Today, I think there is a abundant amount of access that the regulators provide practitioners, and they're open. They create forums to hear the needs and the gaps and the challenges. I can't claim they agree to everything that is raised, but they clearly at least give you that audience. So I think the level of access and the degree of interaction now is far more easier than it used to be before. And also the scale of change, and we heard it from some of the speakers who spoke before us, is dramatic. I mean, there are so many areas now where we are at world class, if not ahead of the rest of the world. So I think, full marks to the regulatory bodies.
Great. Thank you, Jaspal. And then I come to you, Ashutosh, and half of the business of Credible, as you said, was tech, and half of the business is NBFC, right? So what would be some of the ways that you would suggest to the audience and you would like to share from how you have approached this?
Yeah. No, I think this is an interesting one, and I completely agree with Jaspal's view, right? So from a regulator perspective and from a DPI perspective, what India has achieved is something which is enviable by most countries. They're trying to replicate our models out. So I think RBI has taken various steps. Most of the regulatory bodies have taken various steps which are at times ahead of time as well. So for instance, what we've achieved with initiatives, the RBI Innovation Hub which is created. For FinTechs, there's a specific forum. There are working groups created on specific themes. Internationally, there's a lot of talk about going and doing deep tier supply chain financing, etc. We as a country have taken this as a centralized initiative as well. IBDIC is working on this. So I think the forums and the bodies are taking steps which are very, very focused, specific. Most of the countries don't have a regulator which is thinking ahead of time. Is there more which can be done? Definitely, as there is a funding gap of MSMEs which is massive. Can we do more? And for that, there actually is a forum where FinTechs can voice out what we believe could be a right solve in some of these facets. It's actually heard, feedback is also given. And we've attended some forums where a lot of FinTechs were involved, invited together, where we voiced out opinions, and it's a very, very collaborative discussion which is there, right? So which actually means the ideas are also being receptive. So I think for a FinTech, it provides a great forum where you have a regulator which is very, very pro-change, development, thinking ahead. From an NBFC perspective, it's a fully regulated environment where you are given guidelines how you need to operate. So, and this again is thinking ahead of time. A lot of our KYC modules have gone. There are ways in which you can do video KYC, etc. A lot of countries are still paper heavy, right? So we are still thinking ahead in terms of moving into areas which will be digital compared to most of the other countries which are lagging behind. And that's our experience in terms of, as a SaaS company, offering our propositions to banks outside India as well, in other markets. Most of the Southeast Asian markets, a lot of markets in Middle East, etc., are well behind us.
Cool. Isn't that reassuring? All the three participants in the ecosystem believing that we are moving in the right direction. And on that note, I would like to conclude this session. Of course, we had Q&A built in, but for the paucity of time, these gentlemen will be available after the session and you could put forward your questions. But thank you very much for the patient listening, and thank you very much, gentlemen, for your inputs. We would just share a brief mementos with you and then we'll move forward, right? Thank you. Thank you so much.